Okay.
Okay.
Yes, so we are ready to go.
Yeah, free promo to Luke. I'd like to see my grandson. I'm right. I'm live.
Yes, you're right.
Not that if my family's watching, but hey, I'd like to call to order the Finance and Budget Committee of the Children's Services Council of Leon County. Ms. Clay, if I could talk you into doing the roll for us. Oh, it's what time?
5:06.
It's 5:06.
Mr. Hannah,
Present.
Commissioner Cummings, Dr. Glenn,
Yeah.
Mr. Mitchell,
Here.
you have it.
Thank you, Ms. Clay. And, you know, in mentioning Commissioner Cummings, I know that she's out due to the loss of her mom. Just a big shout out of prayers and thoughts for the commissioner and her entire family. Okay, if item 3 is the approval of the agenda, if I think.
I move that we approve the agenda.
Second. Thank you, Mr. Superintendent. Moved and seconded without objection, show the approval of the agenda, which begins with general public comment.
There's no public comment.
You're rocking along. Item 5 is the audited financial reports that is being presented by Purvis Gray. And as the folks from Purvis Gray are coming up, I do want to publicly thank them. I know we got, I think, 3 proposals when we put the ITN out on the street for firms. All 3 were very qualified. One decided that they could offer the services and offer it to us at a really good rate, which is good for the community. So thank you, guys. Much appreciated. And with that, we're doing a presentation. Is that how? Yes. Okay.
What would you like for me to stand anywhere?
Turn the, yeah.
This way?
Thank you.
Okay. All right. Well, good evening, everyone. I'm Ryan Tucker. I'm a partner with Purvis Gray. I've got Megan Camp with me. She's the senior manager on the audit team. And Daniel Sturmer, he's the senior auditor on the engagement team. We're here to present both the results of both of our audits. We have 2 audits, 2 for the price of 1. And
Literally.
For September 30th, 2022 and 21. So overall, the audits went very well, particularly considering you are a new entity. This is the first time you've gone through this. Not an A+ audit, as Mr. Hannah celebrated recently and made sure everyone was aware, but it was a very good audit. And so we certainly appreciate the opportunity to be with y'all, work with you all, and the cooperation from all of your staff to helping this go smoothly, getting all of our requests together. There's a lot of documentation that goes on back and forth to pull this all together. If you go to our next slide, I'll kind of give you an overall summary of the results. And most importantly, there is at the top, you're going to get a clean, unmodified opinion, a clean opinion on both financial statements. There were some audit standard changes between these 2 years, so there's some formatting differences in the 2 reports, but essentially it's the same thing, unmodified or clean opinion on both years. So that just means that your financial statements are presented fairly in accordance with GAAP. And when we get into these statements, there's some complications with governmental accounting. We'll try to navigate through that, but not get too far into the weeds. But there's some oddities that go on with governmental accounting, as Jim could probably attest to. But overall, our report on internal control and financial reporting, there were no significant deficiencies or material weaknesses in internal control and no non-compliance that we discovered. We also have to issue an examination report, an attestation on the council's compliance with Florida Statutes 218, 415, which is in regard to your investment of public funds. And there were no compliance issues there. We had one recommendation in the management letter, which we will go over in just a minute. Next slide. These are some required communications to those charged with governance. And these are kind of standard things that we have to disclose, that there are two separate letters as titled communication with those charged with governance. I'm going to summarize what's in those reports here. Talks about your accounting policies, if there are changes from one year to the next. There was an implementation of GASB 87, which is on leases. There was no impact to your financial statements because you didn't have any leases that were in effect at that time, but there is a lease that got entered into in 2023 that we'll talk about in just a minute. There is some impact to your financial statements that come through on that. There were two estimates in the financial statements. These are fairly standard estimates here regarding the net pension liability you're involved in Florida retirement system. There's some actuarial assumptions that are done at the state level that are considered estimates. And then the compensated absences liability. We didn't feel there was any aggressive positions being taken in any of your estimates, so nothing unusual to report there. No sensitive disclosures. The disclosures are neutral, consistent, and clear. We are pleased to report on the next slide there that there were no significant difficulties in dealing with management. As I mentioned, they were able to get all the records for us that we needed. Now, this next item here is some of the audit adjustments that we posted as part of our audit. And these are fairly routine. I know y'all kind of keep your books on the cash basis throughout the year. So there were some accruals that had to be booked in terms of reporting some accounts payable, prepaid expenses, and things like of that nature in both years. So we had to flow that first year into the second and so forth. There were no disagreements with management. And then there were some representations that we got from management in terms of a representation letter. That's standard course of business. And we're not aware of any consultations with other independent accountants. And there is the other last item here is that there is a new accounting standard that will be applicable in the FY 2023 fiscal year. It's very similar to the statement on leases, but it's regarding subscription-based IT arrangements. So you'll have to evaluate those, pull all those together and see if anything's going to have to be reported. That. So we're just giving y'all a heads up. This next item is in the management letter of the FY 2022 report. And so this is kind of our recommendations that we've brought together. It's really about developing some accounting policies and procedures and getting some of the reviews and approvals, documenting those reviews and approvals, and further developing some of your policies in terms of travel, P cards, investment policies. I know Jim's going to be talking about that later. Fixed asset policies. You don't have any fixed assets in this report yet, but you will eventually. And then vacation and sick leave submission and review policies, just tightening up some things here and there. And they've already started developing these. They've issued their response. Management has. It's on page 34 and 35 in our FY 2022 report. And so they're on their way to getting these in place.
Sure. So the 21 to 22, and I forget the term you use, we sort of had to kind of keep punting it forward because we were brand new in the middle of a fiscal year. So I understood that point. The issue, and I think it's a great issue that you raised. I think the executive committee, the finance committee, and the full board agreed with the P card and the travel. Have you taken a look at the new policy?
No, I don't think we've gotten past where we kind of ended up.
Okay, all right.
This audit. But we
So
will.
it will be next year, that chance. Okay, thank you.
Okay, so there's some financial highlights on the next slide. Here, and so here's a year over year comparison. So 2021, you only had 5 months of activity and y'all are just kind of in that startup phase, didn't have any employees. And so there was not a whole lot going on there, 84,000. You did take on a loan from the county of about 60,000 just to pay some bills. There were some bills that came in late, so we had to accrue those back into this year. So you ultimately, took down another 90,000 from the county and immediately paid that off. So you can kind of see the activity that went on over those 2 years there. So this is what I should say, this is on a modified accrual. This is where it gets a little confusing. This is on modified accrual. This is kind of similar to how your budget is put together. So this is almost like a cash in, cash out with some small accruals at year end for a short term, what we call a short term financial statement. And then when they do this conversion to long term financials, there's a separate long term financial statement in here as well. It's in the front. But if you turn to the next tab is the balance sheet. Of course, this is short term focus here. So kind of focusing on what's available to be spent here. So you've got 4.6 million of total assets and about just under 40,000 total liabilities, which leaves you with 4.5 million of fund balance carries into the new year. The next slide is just the budget versus actual comparison for 2022. And of course, you have the original budget that got passed by the board. Then you have a series of budget amendments, as you go through the course of the year. And then there's a comparison against the actual and a variance. So you came in over budget on revenues by about 538,000 and under budget on expenses by just under 4 million. So one of the things that we have to look at as part of our compliance testing is that you don't overspend your budget. And of course, you didn't have that issue here. The next one is the 2021 budget. And of course, there was not much going on during that time, 84,000, as I mentioned, of operating expenses. There were some disclosures in the financial statements, and these are more prominent in the 2022 report. They're on pages 15 through 23 of the 2022 report. Just kind of gives some information about your accounting policies, which are still in development. Of course, there's some fund balance, classification, explanation, property tax millage rates, your capital asset policies, and so forth. On note 5, if you go to the next slide, I'll just show you a screenshot of what that looks like. Of course, you had the loan, if this is for 2022 fiscal year. So you had 60,000 to start the year, you took down another 90 and repaid that immediately when you got your first draw from the tax collector's office. You have some compensated assets as liability that they're going to be tracking going forward. And then those next 2 items are just your proportionate share of the net pension liability at FRS. So yeah, a few years ago, all the governments had to book their proportionate share of these liabilities. So that's the council's proportion.
What is the compensated absence?
Accrued leave, so sick and vacation.
Okay.
That's the balances that they have earned, carrying into the next year. So, if you flip back to the previous slide, there's just 1 or 2 other things. Note 6, there's about 4 or 5 pages of disclosures on the FRS. So just kind of interesting if you're a nerd like me. Note 7 talks about your grant policies and how you they might have to refund any unused grant funds. And then the last one there is on note 8, which is a lease agreement that was entered into after year end. That is the issue that may cause you a budget problem Because in the year you enter into a new lease, you have to book some accounting entry, This is just an accounting thing, but it may cause you a problem on your budget. So we've been talking to them about that, but you have to book the entire net present value of those future minimum lease payments in that initial year. So that's something to just let us know if you come across that when you have that all ready to go. And we could explain or calculate those amounts and everything for you, but it may require a budget amendment there. I think that was about it. Does anybody have any questions on any of that? Or if there's anything else y'all want to go through, we're glad to do it.
I have one question on the lease and as a non-CPA, and I'm just trying to. If we could rewind the clock back to when we entered into the lease, what should it have looked like? And recognizing that, you know, we were kind of new and we're sort of just entering into this agreement. What's the accounting rationale behind what we should have done?
Well, y'all didn't do anything wrong. This is a new requirement. And so every lease that a government enters into nowadays, whether it used to be a capital lease or an operating lease,
Right.
now all leases, you have to evaluate them as to whether or not they're exceed 12 months. And if they do, then you need to look at whether or not you're going to have to book the present value of those future minimum lease payments on as an asset and a liability. So it's a right to use asset and a corresponding liability.
Right.
And so.
And eventually, I mean, it works itself out in the wash. It's
Yeah.
sort of anticipating the fact that the council has this liability that is more than 12 months out.
Correct.
Okay. And I think we entered into an agreement that was a little different than some governments because of this, that the landlord, as part of the ultimate agreement we signed, required 2 years or 3 years? Two. Okay. So is that what we are?
Yeah, that will qualify, under this new reporting standard.
That's okay. All right.
Yeah. So you don't want to worry about it. Don't ever enter into a lease more than 12 months, but I know that's almost impossible. And then now this new GASB, I wish y'all would contact GASB about these that don't make a lot of sense. But when you have an IT arrangement that is multi-years, same sort of situation, you'll have to put this right to use asset on your books and a liability. So for the future payments under this license for whatever IT subscription you've entered it. So these multi-year IT subscriptions.
So again, going back to my question about the rationale, and I guess I understand what they're trying to do is basically say, look, if the CSC decided to close their doors tomorrow, there are still liabilities that you have on the books. An IT agreement that extends beyond your existence, a lease agreement that extends beyond your existence. And so they're just asking us to book that as a liability, right?
Yeah, all right. And if let's say you somehow backed out of one or whatever, it would just reverse itself essentially.
Got it.
Yeah.
Thanks. Are there any other questions?
Just one quick question for you. So I told you I did my best to read through that report. I really did. And it did, other than the policies that we needed to update, I didn't have heartburn at all. And from your professional opinion, do you have any major concerns as to where we are with our books?
No.
Okay.
No, and we felt good about it. Just kind of tightening up a few little things here and there. That was really all of what our recommendations were.
And you guys you've done audits on other children's services councils?
Yes, the one in Gainesville.
Okay, so perfect. Did you do that one in their 1.5 year? Or I don't know when they went in, but they're.
Yeah, it was a year or so before this one, I think maybe 2 years.
Okay, and sort of I don't want to call them growing pains because there's not really growing pains when it came to our financials, but newbie status. Do we look like other, new entities, be it a Children's Services Council.
Oh, yeah.
Or,
Yeah, this is
Yeah.
very common.
Good.
These types of issues, getting your policies and procedures developed, that is very common, absolutely.
all right.
Thank you.
Yeah, thank you all. And I meant what I said about, to me, it's a community service that you guys did it for the price you did it, and it's much appreciated.
Absolutely.
It's the treasurer, but also as a taxpayer. So thank you.
Thank you so much. Okay, great.
Yeah, if y'all need to get in contact with us, if you have questions throughout the year, please feel free to reach out. We'll be glad to try to answer any of your questions.
Thanks for breaking it down. It was very easy to follow. Appreciate that.
Yeah, it would be kind of complicated.
Thank you.
Item 6 again.
Thank you all.
Thank you all very much. Item 6 is an item that I have,
So we're not gonna hold on.
I think the committee needs to formulate a recommendation because they will be presenting to the full council per statute.
so would it be just accepting then the audited financial
Recommending to the
reports
council.
for 2020, 21 and 2021, 22?
Yes.
Can I get a motion?
I guess I'll make a motion that we ask the council to accept the audit for 2021, 21, 22. Yes, that's my motion.
Second. Okay. We have a motion and a second, without objection, show it approved. Item 6 is an item that I have sent to Ms. Gray after consulting with our outside counsel, who suggested that I don't have a conflict, but I looked at the law and he agreed with me that not having a conflict and a perceived conflict that could be perceived by someone further down the road, I have the ability to abstain. So I'm going to abstain from the discussion and a vote on item 6. If I recognize that we are a committee of 4, which means that because we only have 2, we essentially can only move the item forward without a recommendation. And so with that, Dr. Glenn, I'd like to turn this over to you. And I'm going to excuse myself. I'll come back, but I'm going to excuse myself. This is a good comfort break.
Okay, no worries. Thank you very much. Okay, so we're moving on to item number 6, which is the intergovernmental investment pool. And I think we do have a presentation, right? Was there anything else you needed to say?
We do.
Okay, all right, we're ready for you, sir. Thank you very much. Mr. Type, is that correct?
No, so this
Actually-
is, I'm gonna introduce you.
Please.
So Mr. Type could not make it, Matt Type. However, Jim Cook, who is the city treasurer for the city of Tallahassee, serves on the board for FL class
Okay.
and graciously agreed to come and give you this information. And as Treasurer Mitchell said, because we don't have a majority to move the recommendation, we can just simply move it to a council meeting.
Okay.
And it will not be this Thursday's council.
Okay.
Okay, so we'll do it in July. Okay.
Thank
Mr.
you,
Cook.
Very good. Thank you. And on Mr. Kite's behalf, apologies that he couldn't be here. He had other, I think, travel that wouldn't allow him to get back here in time for the meeting. And so he is with Public Trust Advisors. Those at Public Trust Advisors provide the investment support for FL class. And as was stated, I'm Jim Cook. I'm the city treasurer clerk, but in this instance, I do serve on the board of FL class, and I'll make that as an initial comment. I think that's one of the things that is beneficial about that organization is that it provides an opportunity for investments for local governments and agencies, political subdivisions of the state, but does so with a board that is made up of participants. So I'm on the board, but I'm a participant. We have city funds invested with FL class. So I'll make a few comments and probably a little bit different than Mr. Tights. I don't know if you've heard from him before or not, but I'm coming from an investor and participant standpoint, whereas he is on the investing side. A couple of points I don't know if you have or have received. slide deck that he had provided, but I'll just point out a couple of things that I think are important. One is that FL Class is an intergovernmental investment pool authorized under section 218.415 Florida statutes. You heard Purvis Gray note that in their comments that one of the findings was that you were not out of compliance with anything in your cash and investments area. They referenced that in section 218. So FL Class also is authorized by Florida statute, so you'd be complying there. As I mentioned, the board members are your peers, people across the state who might be invested currently. There are a couple of clerks of court, I think Pinellas and Sarasota counties. You have the Orange County tax collector, the assistant tax collector there. I represent the city of Tallahassee. Someone from the city of Stewart is on, and then representative from Miami-Dade schools. So really, I think by design, as they put it together, there are members from around the state. So provides opportunity like this, where if someone can't be here, you do have board members close by to fill in or to provide support as we can. FL Class and stated in their presentation, but our primary goal is to safeguard the public's funds through rigorous credit analysis. I just wanted to touch on that credit analysis because just so happens that last Thursday afternoon and evening, we had a board meeting. So I had a book from that meeting that includes credit analysis. Not only did we have the credit analysis, I think one of the things that I've enjoyed as a board member is, and typically at our quarterly meetings, we'll have the public trust advisors on by a Zoom meeting, but they'll have one of their representatives at each meeting. So this meeting, we had a gentleman named Kevin Barron's. He's the head of credit research. So in addition to our funds, they have other governmental accounts across the country, and they manage $65 billion worth of assets. But the head of their credit research was at our quarterly meeting to give us the update. At a previous meeting, they have a new IT director who came and expressed some of the things he's putting in place so that you just get firsthand information from the folks that are making the decisions on where your money's invested. FL Class has been in existence since 2015 with steady growth, over $6 billion of assets now. Oh, there you go. Slide's right there with me. So that shows you the growth. The top slide, the line is the growth in interest rates over the last couple of years. I don't think FL Class will take complete credit for that. That's where the market has gone, but it does point out that there's a competitive return that you get as at the start of that slide. It almost didn't matter where you had your money invested, you just didn't get any return. But I think you're at the right point now with cash in hand and with an operation that's ongoing now. The market's changed so that you do want to make sure you're invested somewhere so that you do get a return on what you have. A couple of more slides have, the next one has benefits of becoming a participant. As I just mentioned, you have competitive daily yields, you have daily compounding. I think the middle section there, the blue slide, the blue icon says liquidity. You have same day liquidity. I know for us at the city, and I think a lot of organizations, being able to get access to your funds on a daily basis does matter. I would think particularly for an organization like the Children's Services Council, that's important. Doesn't matter how much return you get if you can't get your hands on your money. And so daily liquidity is available. That allows it to be not necessarily the only part of a portfolio, but certainly a viable part. And then the last piece is one that in my experience we don't use significantly, but it does allow for distribution and transfers between other public entities. And then there's an online portal. So as a participant, those who are working with your cash day to day can go online, transact business, gain information, and make changes. And I think so just a couple of additional features, no fees, no minimum balance. So if you have, I think it's about $5 million in cash. If you put it all there, great. If you put $500,000 there, a tenth of it, that's fine. If your balance goes up and down, that's okay too. Unlimited transactions and then dual authorization. So you can't have an an internal control there if you want to have two people authorizing transactions so that you have control with more than one set of eyes looking at what you're doing. On the no fees, no minimum balance, I will say that for a lot of organizations, they do simply ask that if you're making a substantial change in your investments, let them know so that they can plan accordingly. But that might be an Orange County tax collector might have several $100 million. And if there's $100 billion that's going to move, that's fine. But you want to know that in advance so that you don't have to take a loss on one of your investments to accommodate that. I think you and the city of Tallahassee are both in a position where it might be a courtesy, but we're probably not going to change the investment pool completely with a withdrawal on a given day. So then I think that slide is your resources, who you can access, how you get your information, simply letting you know that there's a phone number to call, there are people to reach, sort of a full service opportunity, and then a slide on how to join. So really, I think from the message I would give as a participant is that the daily liquidity is important. The ability to earn something on your investments, as you indicated earlier, as a public entity, you earn a few extra dollars, that's for the benefit of the people you're serving. And so there's an opportunity to manage it as you wish, and be a part. So those are my remarks, but I'll be glad to answer any questions you have. And if there are things that are technical from the investment side, I can pass them on. Please.
Okay, so I probably know less than anybody else over here, so please bear with my questions. So my understanding is that we can invest all of our money, all of it, and so that we can get interest.
Right.
And then at any time, if we need it for anything, we can pull it out same day, no minimums required or anything like that. Is that correct?
That is correct.
Basic understanding. Okay.
That's correct.
And who is your competitor?
So there are other funds across the state or that serve the state. One that you may be familiar with is the state of Florida has a fund that actually probably part of the genesis for this fund being in place, frankly, probably 15 years ago. That fund, there was a little bit of a run on the bank, if you will, and a number of people were not able to get the funds that they needed. And so for a few years after that, I know we at the city made some other arrangements. And since that time, I think the state has made some changes to their fund, but you've also seen FL Class and some others in the marketplace say, here's an opportunity for you. The state fund is managed by the Board of Trustees, which is the governor, attorney general, and CFO, whereas Florida Class is managed by peers and participants in the program. And then there are a couple of others that are provided, and I'm not as familiar with their governance structure. But the key is you need to have somebody who's meets the requirements of Florida statute.
Okay.
And this is one of those, and as a participant, we've been well pleased with that.
And you may have said it, but I didn't capture it. What was the rate of the return on our investment?
That's going to change on a daily basis. Right now, it's just over 5%. That was the slide that had a line that was start off at zero.
Yes.
When you could hardly earn anything, and it probably ended at a date before today, so it would have been adjusted today. But what happens is all of the funds that are in the pool. So if Public Trust Advisors has $6 billion to work with, they're investing all of that in short-term securities. They're not buying anything that's going to mature in 5 years. Might be 180 days, but typically it's going to be within 270 days. So fairly short-term security. And right now, short-term interest rates are higher than they've been in quite some time. So it's a little above 5% today. 6 months from now, could be more or less depending on what the market does. And that's why they're able to provide the liquidity, because things mature quickly and then they reinvest, as opposed to buying one investment that they're going to hold for a long time and not have access to.
And you all only accept funds from government agencies, is that correct? Did I understand that correctly?
That's right. So cities, counties, school boards, expressway authorities, things that are governmental entities in the state of Florida. there are similar funds in other states, but this fund is only Florida entities.
That concludes my questions. Thank you.
So we are with SBA, most of our money, school district is with SBA. We were approached by FL Class recently and really are in discussions. We have advisors that advise our district. I mean, it's a much bigger number than we're talking about here. To look at this as a potential option. When you say no fees though, so how does FL Class, I mean, they're paying the bills, they're paying salaries, they're.
Sorry, I missed, but that's no fees on transactions. So there is a fee on the investment balance, and Matt would need to get you what that is specifically. I know it's a competitive rate with anybody that's out there, but yes, there is a fee on the investments. There's no fee on transactions. Excellent question.
And with the city, are you at liberty to say
Sure.
a number what the city of Tallahassee has invested with FL Class?
Sure. You know better than all the rest of us that that's a public record anyway. So yes. So we.
I don't want to put you in an uncomfortable position.
That's fine. Now, we are typically between 10 and $50 million. For us, we do have some of our portfolio is invested a little bit longer because we don't need it. We have reserve and that sort of thing that we're not going to have to touch. And so for the liquid or shorter part, that can vary, but we have our bank account, which doesn't pay much. So we sweep our money. We use FL Class as that place for liquid access. And so on October 1st, it's probably not very much because we've just made debt service and other payments. And then at other times we may have opportunities where it builds up. Maybe we issue bonds and we've got $100 million. We may have a sizable balance there, but that's really where we go for our liquid needs and just kind of sweep our money on a daily basis.
As opposed to having a large amount of cash in a local bank that's drawing nothing.
Correct.
Yeah.
Exactly right.
I mean, now's the time. I mean, it hadn't been this good in a number of years. It's just a matter of, is this the vehicle or is there another vehicle? I think, obviously has a good reputation with, people from across the state of Florida. And then the return on investment is one thing, but it's the security of the investment on the front end to make sure that we aren't investing in something that's extremely risky that we could potentially jeopardize taxpayer dollars. And if it's good enough, city of Tallahassee and quite honestly, our school district looking very seriously, this is an option too. I think might be an option for our council.
Okay. You seem to be comfortable with this, correct? Okay.
So, Chair Glenn, if you'll
Yes.
allow me to just provide a little more
Please.
context. So as you all are aware, former council member Liza McFadden
Yes.
was head of our investment work group where they issued an RFI to get information from various investment firms. We had 2 responses. I can't even remember who the other response was, and FL Class was the other one. After the work group looked at those responses, their question was, they believed that FL Class was the better option for us and wanted to see if we could do a sole source because of the way that FL Class was developed, and that it is only for government entities in the state of Florida. We checked with our general counsel and they advised that it actually does not fall under sole source or any other place, but rather because it was created for Florida governments, we could go ahead and enter into talking with them about whether it would work for us.
Yeah.
There are a couple things that also, and I am not the investment person, I put my stuff in them, what I do is there. But the thing that is also attractive about this is that with the board passing a 10% reserve policy, 2% in catastrophe, 8% in contingency, we can actually set that up in FL Class so that those are 2 separate accounts that the money flows into in accordance with the reserve policy. Then we could also have a third one where we sit even more of our funds so that it's not just sitting in the bank and are able to pull it as we need it to fund our awarded programs.
But it's my understanding we could put it all in, right, in any, and pull it out at any time.
We could put it all. I will tell you, after talking with Matt, we still need to keep our bank account
Okay,
as a public depository. And so we would have some that sits in there to pay our bills, but we can pull it out and put it in there and have as much of it sit in FL class as possible. John was in that meeting with us. So I feel like we have good information and that if the board sees fit by resolution, then this would be a good option for us, especially as a novice. I am a novice. And so I feel comfortable that the way that they will handhold us through this process gets us where we need to be and accomplishes that investment goal that the council had.
thank you for that, because that was my first question. What's the difference between this and what Liza was doing? And I did not realize that this was one of the respondents from that they received. So, okay, that makes me feel better too. All right, thank you very much. Mr. Hanna, any other additional questions? No? Anything else you would like to cover with us, Mr. Cook?
I don't think so. I appreciate the opportunity. And I know Matt would express the same. I will just make a personal comment there on your discussion at the end. I think what you do with your money is like what you did with your financial statements. Your first year was partial year, then you had a full year. They've got some recommendations on policies that you're already addressing. So as you go through this decision process, you may take this step and then another step. You may take 3 steps and then one in another direction. I won't say backward because you're not moving backwards, but you see what I'm saying. You have the flexibility. I think that's really what you want. And absolutely, you need to keep your bank account. I think one of the things that you hear from, particularly some of the large accounts, is we can have money in more than one place, and there's benefit to that too. Sometimes to have a diversity of placement. So again, thank you for the opportunity. If there's any questions I can answer as a participant, I'd be happy to do that. I'm here in town. If you need other assistance, I can get in touch with the right folks.
Oh, awesome. Thank you very much. We appreciate it. Thank
Good to see everybody.
Thank you
Have a good
so
night.
much.
And so one more thing, Chair Glenn, before you turn back over to our treasurer. What we will do is, since we have council meeting on Thursday, this will not come before the council on Thursday. It can come before the council in July, and hopefully at our next budget and finance meeting in July, council member Cummings will be able to join us, and then you all can make your recommendation, and then we can go through the steps that way. Sorry.
Yeah, no worries. I'm assuming we have no public comments or anything related to this. Is that correct, Ms.?
No public
Okay, all
comment.
right. So since we can't make a recommendation, we will move this forward to our July meeting. So I will yield it back to you, Mr. Bishop.
Much, Dr. Glenn. And actually, Mr. Rowe advised that. So I shared with Ms. Clay, and it is available to anybody who wants to see it. The perceived conflict, but FL class, again, an entity run by government for government only. Because there's all different governments, they are not able to invest their money. So they hire a manager. That manager is someone I represent. And so it is, I mean, it's twice removed, but it makes me feel much more comfortable to one, disclose that I represent Public Trust Advisors and was not part of any of this procurement, but that's why I chose. And again, it's written in the record for anybody listening and wanting to read it. Item 7, which I think is the trim notice, and just if you guys remember in the past, we've gone through this sort of getting us ready to get ready. The property appraiser has supplied Dina an estimate of what he believes, what they believe we should anticipate in terms of increase in our property values. When Sika and Dina, to their credit, reached out to other CSCs, Martin County, I think Broward and Dade, they had a much higher number. And I'll tell you, as a guy who knows the state and pays property tax in one of those southern counties, it's their property values are going up at a much higher clip than ours. While Leon County continues a nice steady growth, and we have some development, I think that the council should know what its budget's going to be, like really how much are we going to bring in? And so we are there on the side of caution in the percentage, again, based on what the property appraiser has shared with us. And the numbers that they've brought forward reflect a more conservative. Listen, if I were a gambling man, I would expect that we would probably receive a little bit more. And if that is the case, as has been in the past, we have the ability to spend a little bit more if we have needs that arise. So with that, and I see, I don't know, you want to walk us through it? Is that a yes? Yeah, good. I mean, jam on it. I think. What?
Jam on it.
Maybe an 80s term.
Hey,
I'm not sure I've said that since the 80s. Why don't you walk us through the different trim rates as well as the specific numbers that the property appraiser threw out to us?
yes, thank you, Treasurer Mitchell. So you will have in front of you, you have 2 pages, and it is a chart you've seen before now that shows the valuation estimates for property tax revenue for our specific special district. And the valuation that we have received, the estimate that we've received as of June 1st is $23,339,495,588, and that is under fiscal year 24. We will receive a final estimate on July 1st, which could be the same estimate. It could go higher, it could go lower. For the purposes of looking at where the council wants to fall as far as a millage rate is concerned, we input that number and you will see estimations for 0.375 mil at 95%, which is the 8,207,820. It shows you what our annual reserves would be with an 8%. For our annual reserves, that's the contingency, which is the 656,000. And then you'll see the 2%, which is catastrophe at 164,156. And so there's
Secret, what page are you on?
94 on page 94.
This one page, I got it 2 years on back.
Okay, and so the revenue that we would estimate to receive for the 0.375 mil at 95% is the 8.2 million there, and that's shaded in the yellow.
That's where we are right now.
We are at 0.375 exactly. So then if you go down to 0.4375, we were just trying to get between where we are now and 0.5. We'd be looking at revenue of $9,575,790. Our projected annual increase is about 663,000, and then our reserve would be 957,000 and change. If we go all the way to the cap at 0.5 mil at 95%, we're looking at 10,943,000 and change. We'd have an increase of about 758,000, and then reserves of 1 million, a little over 1 million. So that, and now you could, and so what we did was we did evaluation all the way out in the fiscal years, but I will tell you, for the purposes of the budget that you're gonna look at shortly, you wanna look at fiscal year 24.
So just two kind of quick points. The first point is, Superintendent, if you remember back in the very first year that we talked about reserves, and then last year, as we struggled with, the millage rate and what have you, you asked the question, when do we stop collecting reserves? And that's really the will of the council. The requirement is that we have reserves. That's what the statutory requirement is. Most state agencies have a 5% reserve fund. That 5%, will be, it's based on the total annual budget, whatever our total proposed budget would be. And we can stop collecting that at any point. I think now that we're going into essentially year 3, we are year 3 and a half, I guess, or what would be year 3 and a half at the end. This is, again, my recommendation. The will of the council can do whatever it wants. I would say that now is the time to consider stopping the building that reserve and just leaving it at the 5% of the total annual budget. Only because we now sort of know how we spend and what we're spending, and our policies. I'll tell you, I mean, I don't know if it's on this agenda, maybe it is, but if you look at our expenses now, just our monthly expenses, it's so clear that we've hit our stride, that we know what we're doing, we're not overspent. There's everything sort of just is rolling along. I don't think there are going to be any huge surprises. That's why I recommend that at the end of this year, either this is the last year or let last year be the last year. I think one more year is probably a healthy thing. The final thing I'll point out is if you look at the way that the millage rate is, you begin to think about 0.375 and 4, literally the halfway between. And I'm sure that that maybe somebody wants to see the numbers below 0.375. But I didn't ask that they provide those numbers. So they've provided the full millage rate that we can go to of 0.5 and the 0.375 and the halfway point. The numbers to reflect on the difference, though, is not, when Sika is reading them out, if we went the full millage rate, we would bring in a little north of $10.9 million. We will probably bring in more than what the June number, the property appraiser, if history is any indication. But if you compare that 10.9 million to what we brought in at 0.375, it's 7.6 million. So again, that's a big jump. I'm not saying we don't need it. I am not making a statement on which is right or wrong. I just want to point out that it's a difference in a jump. Where Sika is correct is the increase. If we had 0.5 last year, what would that increase be on 0.5 this year? So just something to keep in mind.
Repeat that again.
All
Your
right.
last point. Because
So what we brought in this year, okay, if you look, 7.6 million, right? If we were to take the full 0.5 at 95%, so we're keeping apples to apples, we would bring in 10.9 million. That is
big difference.
it is. Okay. Again, I'm not saying that we don't. It's clear we have the need out there in the community. This is not a statement of which is right and which is wrong. This is just a dollar amount difference.
Okay.
So those are the only 2 points that I want to make. Is one, we have reached a time where we are mature enough as an organization with a staff that knows the will of the council and the needs of running the council. Our budgets are tried and true at this point. You know, and we have a set staff, we have a set budget on other personnel services, contracted services that the executive director can employ as needed, but that's a set dollar amount. So we really do have, for the first time, I can't believe I'm actually saying this, a very clear idea of what to expect.
So basically, we would have, you went to 0.5, and I'm not suggesting that we did, actually, I would not support that. But it would be about $2.7 million more in revenue over the next year. But, and so what decisions do we need to make today or to recommend to the council?
We're not.
Okay,
So this is, right, this was getting ready to get ready because the initial numbers have come in. So I asked Dina and Sika to put together just something that we can bring to the council. Hey, you guys, start thinking about this. You know, and for all of our own personal budgets, it's nice to know, you know, what you can expect in the coming year so that you can begin to think about how do we want to spend money? How much money do we have to spend? And, oh, by the way, whereas this has never been the case in the past, we're about to get a whole bunch of spending requests coming in or decisions that we have to make about spending money. And it isn't spending money like in the summer program of this 1 year.
Yeah.
You know, these are extended. So it's kind of good just to have all that information, Superintendent. That's,
I think
one,
I
we
have
have
a
the
question.
information.
So y'all said that there's gonna be a reevaluation of the numbers by July 1. Like, I know I'm asking for a speculative response, but what do you think is the difference between the values that we have in June compared to July? I mean, to me, that doesn't seem like a long.
Remember it isn't a long period. It's not the 1 month difference. I've never known them to go down, and it's certainly, I know for certain they've always gone up since we've been in existence. I'm trying to think of all the years that I've sort of relied on, like we rely on seeing how much money we have. There were times where it makes a huge difference made a huge difference to my bottom line in state government. I would look for those numbers, and it isn't always on property values.
Okay.
Ours is a little more simple, but they will likely go up.
Okay.
It's really just a question of how much, which is why when Dina and Sika and I talked about it, I said, please, I want to make sure that the council votes the way they want to vote based on what the budget amount is. And so we could throw out, oh, they're going to go up, 10% like in Martin County. Well, in Martin County, you can't buy a one bedroom, one bath place, for really much less than $400,000. So yeah, theirs are going up. Our numbers reflect, I think we came up with
Like 7.
yeah, well, that's
7%.
yeah, and that's in, I think the property appraiser said 10%, right?
Yeah, ours came in at about 7.5.
That for the property appraiser.
appraisal.
But we built ours at, I think, 5% is what,
Originally, so the very first chart you got was
Right.
at 4%.
4%.
And then after we talked, we went up to right at 7, which was where you thought we would come in. The property appraiser
And that's
came
when
in at
he came in at
7.5.
Okay. So Dr. Glenn, your question, the answer is it will probably be higher than 7.5. And the number that we are throwing out here is based on 7.
Okay.
Okay.
Okay. And then one other question. So for this current year, what is our anticipated number of dollars on funded projects? I don't remember that number.
So it's interesting you asked that. So if you can hold it,
Okay,
we can show you in the drafts of the budget.
Okay. thank you, because that helps me figure out what I think we need to do as I look at these numbers. Okay.
And remember, it's all. That's why we are bringing these at the same time. The decision of the council will always be, like, as these new funding opportunities come forward that have been evaluated and what have you. I think about the summer program and the fact that we decided to, I can't remember, did we end up just going with the recommendation and funding everything? Or no,
No,
we didn't. We cut back on the
70%,
feeding.
Yeah.
Right. No, I didn't mean, I meant what the evaluation teams. So that number will be as precise as we make it as a council.
That makes sense. Okay. So this was just for our understanding. Okay, and we're not making any recommendations or anything at this moment, right?
No,
Okay.
but these numbers are going
Yeah.
forward for the whole council to get a good
Yeah,
flavor
sure. Okay.
with as well.
That makes sense. Okay.
Okay, so, so that's the, the timeline. Do you want to just walk us through the timeline one more time?
So the timeline's on page 96. And so step one is today, where you just do budget preparation and get the information on trim. Step two is where we'll go to the council. So on Thursday, you'll just have a discussion and the treasurer will present this chart again. And we actually, from this meeting, will have drafts of the operational budget to provide to the council. There will be no decisions made until July,
Okay.
but we'll give that information. And then
So I'm sorry. So during Thursday's meeting, we'll have the same kind of conversation we're having now.
kind of conversation.
Okay, no decisions,
No
just,
decision.
okay. Just making sure. Thank you.
Then on July 10th, the Budget and Finance Committee will meet 5 p.m. Again, you can suggest at that meeting where you think that trim rate should end up. Then in July, on July 20th, there'll be the draft budget review. The public meeting schedule will be, it's already firm, but we'll firm it up again. And you will approve the tentative millage rate and the tentative budget. I know it sounds crazy, you're approving the tentative, but you're approving tentative in both places. Right after that meeting, I will fill out the forms that the property appraiser needs and the tax collector needs to let them know where you have fallen regarding your tentative trim. So I fill all of that out. They inform the notices from there. We were talking about that, right?
That's when they send it to the public. That's why it's just a proposed that we're approving, is then they send it to the public to say, hey, look what these people want to spend of your dollars. And the CSC is a fraction of what others, but that's
Sure.
gives everybody the opportunity to opine publicly.
Step 5, we'll have our first hearing, and that's scheduled for September 14th after our governing council meeting at 6:05. You'll pass the resolution for the tentative rate and pass the resolution for the tentative budget. The second trim hearing is Thursday, September 28th at 5:15. You'll do your final resolution for millage and final resolution for budget. Just want to remind us that as we are still waiting on appointments for the 2 vacant positions, I guess technically 3 positions, it's going to be imperative that we have at least 5 council members at all these meetings to ensure that we can pass our resolutions.
Okay, I get back in the country on September 27th.
It's secret, so 5 or is it 6? Because 5 is a split and fails. That's why
Well, so the way our bylaws read, we must, for the purposes of quorum, we must have a majority of the sitting members present. So we have 8, so that means we have to have at least 5 present to operate business. And then of those 5, the majority will.
Oh, okay. All right. So it is not the total number of seats available. It's the ones that are filled.
very smartly.
Right.
You all
Okay.
wrote the bylaws so that we
Yeah,
can function. Yes,
thank you, Ted.
yes. So
Okay.
that's the timeline.
Very good. Terrific. Item 8, no action is needed on 7. It's just a review. Item 8 is a draft budget. This is a doozer, because, and not the draft budget. But for the first time, this is a real budget. This is going to look like a real budget. We won't have office furniture rolling over.
Yeah.
It's gonna look like what every organization looks at when they look at their annual budget. And it's the beginning of,
Now Treasurer Mitchell?
yes.
Would you like me to?
Oh, yeah.
Go through
Oh,
it?
yeah, you've got the,
I got the floor.
Yeah.
Name on it.
I know.
no. If, okay, I'm on it. It's.
All right.
I'm an eighties baby, so that's right down my alley. Okay, so. Per, great guidance from Treasurer Mitchell. We have prepared drafts of our operational budget, and I think for you guys, it's a handout. So it should be the very last thing you have. And we try to be as lean as possible with our operations, so as much money as possible actually goes into program.
It's in.
I did.
It's right
It's
past
the very last after
Very
I felt that. And so what we did, we looked at the trim chart that you all had, and we inserted the ad valorem proceeds for 0.375, so that's page 1. Then when you go to page 5, we inserted it for 0.4375. Then when you go to page 9, we inserted it for, and that should be 0.5. I didn't change that, but that should be 0.5 over here on the left. I did change it on the right.
CK, maybe, because how you sent it to me was great. That's why I'm looking, because you can.
Click the tab. So you want me to put it up here?
Well, just so that that
Sure.
Commissioner Cummings and Dr. Glenn and Superintendent Hannah have it, even if we just email it to them later, because that made it easy for me. Yeah. And not
So
that
you
I'm an
did get
Excel
this.
spreadsheet.
You all did get this in your email.
Oh, they did? Okay, all right.
Yeah, I sent it to you first. And
Okay,
then sent it to the rest.
got it.
So let me make one change here, because this was, I thought I had it all perfect.
You did on what you sent me.
I just need to.
It's right on this, it's right on the right, on the, yeah, right, but not on the left. It should just be.
Right. Now it's right.
Okay.
Yeah, we worked hard.
Yeah.
We worked hard on this. Okay, so if we go to the 0.375, and I made it a little larger, so we're looking at the ad valorem tax revenue. Of the $8,207,820. We have our reserves, which have rolled over from this current year of 381,619 and change. Then we have the rollover from the previous year. That's what you were asking. So this is $7,785,700. So what we did was we looked at the programs we are currently funding, the money that we have already paid out, the programs that you are proposing to fund, estimated what would go out and what would roll over. So out of 10.4 million that we would be funding, only 2.6 is going to be paid out. But it's encumbered, the whole 10.4 is encumbered. So when you subtract the 2.6 from the 10.4, you get 7.7 million.
So that includes the summer and the family
Summer
support,
will-
all of those.
Yes, summer will already be paid out.
Okay.
What it does include is family supports. And in family supports, it includes the FRCs, the Family Resource Center. It includes the mentoring,
Right.
and it also includes family strength. But it also includes prenatal, postnatal.
Say that we have the.
When you're saying that, you mean for this upcoming year.
Exactly.
Right.
So what you are getting ready to make decisions on Thursday,
That's that money that's on the
that's
table
that
for
money.
that.
Right.
So because this I didn't have the advantage of. Right now, for the Family Resource Center, the recommendation is we go back out and try to find, see if there's others out there. That's the recommendation. Obviously, the board can make a different vote. But if we didn't fund them on October 1st, whenever it was proposed, that money will stay in the account for whenever we do fund them. Okay, so
So
And that's
if,
included in the 7.7.
so let's say
okay.
you decide
spending it is,
to move forward.
right?
Because of the way the timeline is now, originally, part of that $4 million for Family Resource Center would have been expended.
Right.
The way that it is now, whichever decision you make, it won't be expended until after October. So that $4 million is included in that 4.
And if, let's just say, we did it in March as opposed to October, it would only be $2 million that would be, right?
Right, okay.
So this is rollover for any programs that are funded
On the table.
or on the
Right
table.
now.
Exactly.
Got it.
And you're gonna see that number is gonna be consistent in every budget.
Sika, the dollar amount that is projected on September 30th to be in our checking account with all encumbered funds paid, and I know they're not all going to be, but they were encumbered on September 30th. What's our checking account balance, assuming no huge surprises between now and September 30th?
John, probably.
4 million?
What's it in there now?
It's gonna be higher. In there now, between the two accounts is right at 11 million.
So you're gonna spend. What just went out, plus 150,000 a month?
Right.
Yeah, because I saw on the monthly, but we didn't pay all of their contract, we just paid their monthly contract.
Plus
we
the
paid
other
that.
half.
Right,
I don't know how much that is.
I'm just trying to, again, to say to the council, here's what all this time we've been wise with our funds and we've saved money. And we're going to be able to start to fund programs, which has been, kind of high on everyone's priority list. I just am curious, in addition to the $9 to $11 million that we could receive for this coming year, what I consider rollover is rollover for actual cash.
So actual cash will probably be a couple million more than that 777.
Why?
There's
Why?
11 million in the bank.
Because there's
now.
11 million.
But that includes the reserves,
Right,
Yeah,
Right.
Okay.
right?
Yes.
I mean, rollover that can be spent, but
so we'll take 11 and back out,
seven.
how much for reserve?
Right now,
well, we have
We're
two
at
different
grade one.
reserves. We have 10% that is meant for specific for disaster recovery and what was the
we only have one.
I'm just trying to get to a round number.
So
I'm trying to tell you.
hold on. Let me get the reserve thing straight, before I get to you.
Okay.
So previous to the adoption of the reserve, we were at 5%.
Right.
And so we continued that 5% until September 30th. Starting October,
Of last year, September.
no,
This
September 30th.
Okay, right.
Then starting October, we go up to 10%. But it is split into two categories.
Right.
With the understanding that we are actually planning on spending some of that, right? Because we all, as a council, we passed a resolution that said we will always have 5% of our total budget as a reserve. That was at the very beginning. That was in the, and Sika, this is prior to you coming, that was in our first 3 or 4 meetings.
So I checked, there was never a resolution. It was
We just
just, it was just something y'all decided.
Like I said, there was no resolution.
And so the resolution was passed when the reserve work group came together
You know what?
and did the reserve policy.
What we did was, we didn't pass a resolution clearly. We just built it into the budget and let the council vote on it those two times.
Right.
I got you.
So where you see rollover reserve, that's the 5%. And it's rolled over. So it was 5% from fiscal year 21-22, and then 5% from fiscal year 22-23, for a total of 381,619.
You're just gonna have to jump in. Jump in and say.
I'm sorry.
What you need
I
to.
thought it was 10%.
No. We did 5% the first year.
Yeah.
5% the second year. 10% is the third year,
Okay,
and 10% moving forward. And it is, the policy states that it is never to go above 10% of the ad valorem proceeds.
okay.
So if, I'm sorry, let me just finish, I promise. So when you look at, so if I scroll down, you see the reserves coming back out, that's the 10%, right? That's the 820. Let's say next year, for some crazy reason, the ad valorem goes down. Let's say it goes down to 7 million. Then the reserves can never be more than 10 million of what your ad valorem is.
10%.
10%. What I say, 10 million, 10%. So that could mean that if this 800 is sitting in reserves, we've got to transfer some of that out so that we're only sitting at 10%. So it kind of addresses the issue of where do you stop your reserves? The way that the committee came up with it, they made it so that your reserves will only ever sit at 10% of your ad valorem.
So go back.
It doesn't
Go back
grow.
up.
It just.
It doesn't grow,
Today.
except for what's in, because the reserve is gonna be invested.
Right, but but
Yeah.
in terms of what we set aside, we will always have 10% of the ad valorem taxes in any given year. But some of that money could have been from year one, some of it could be
Yep.
year 6.
You got
It's
it.
just always 10%.
So the 381 is included in the 800. Right,
Down here.
it's not in addition.
It will be on October.
So you're just basically adding 500 and something thousand
You got
to
it.
get to 820.
Yes.
Okay, go back up. So you think at the end of the day, if you have 11 million now, you're gonna have, is that 381 included in the 7,785?
No, it is
Separate,
not.
okay. And
It
so
is
you
not.
think you're gonna actually have more
Mhm.
cash than the 7,785?
I think we'll have more cash.
All right, so when you add those two together, then you get, or add all that together, you're at 16.5. All right.
Make sense?
It does, and I think we just need to make a decision. Is that number 10%? Is it 5% or is it 10%, right? That's
So-
Which
of the
one?
decisions.
This one?
Yeah.
So
No, this one's 10%.
Yeah.
Because
on a going forward basis. but-
going forward. I'm
So,
sorry.
so the 5%, how we were doing it is we were building that into the budget every year. And so that we got to, so we got to $380,000. Well, if we were there, we weren't actually doing 5% annually. We were doing 5% total,
Rolling.
the same way that we're doing the 10%.
And so is it your thought or goal to have the 10%?
I was not on the committee. It's always been
Moving forward, is it your position?
I
to
must
have-
have voted yes on that because I don't remember voting that.
I think you did it. And that's what I brought up, when is it gonna end?
No, right.
Because you just keep building reserves until you have.
And in this
$38
case,
of reserves.
it ends. It's already ended.
But are you suggesting that that number be 820 or that number be 310?
Well.
I mean, 410.
410. This were, again, this is not, a state budget doesn't have to anticipate a hurricane. And that's really what that 5% was for, or COVID or something of that nature, but we wanted the money. Personally, I'm a 5% guy.
I am too,
But you all passed a resolution.
Right.
but it says 10%.
That says 10%.
I-
And
Okay,
it's
so-
always gonna be 10%.
right, but it's 10% unless we change the resolution.
Right, 10%
You
here.
changed it, yeah.
Right, 10% never to exceed the 10% of that.
Right, it's not 10% of 16 million. It's
Right.
10% of the collection.
Whatever.
After you hit it, you're gonna put a couple $100,000 in a year to just keep it where it needs to be.
Or take money out.
Don't take money out.
Yeah, I can.
That's fine. Sure, go ahead, so coming up on that.
All right. Okay, so I'm just glad we clarified that because yeah, I feel much better. Here I was starting to think, when do we shut it off? Well, we kind of have shut it off. We shut it off with a resolution at 10%.
All right, I've read the other budgets with the 4 point whatever and then the 0.5. So
So,
I understand everything. And
okay,
all those numbers are the same for every budget.
they're the same,
Right.
exactly. The only difference,
Funding budget.
Is the 10%
The
number.
amount of money that we have for funding, that's the big difference
on,
that
let me-
changes, right?
yes.
Okay.
Yes, so this anticipates or takes into consideration, I don't know why you can't see the whole thing. Okay. So this is gonna look different on every budget. So when you see the stars mean that that is something that was started in this year and accounted for into the new year. So the early learning would be accounted for, starts in this year, and we anticipate that's gonna go well, so it's over in next year. Prenatal, postnatal supports, I'm sorry, I backed up, it's new money. The ones that are not starred
Arthur.
is continuation money. Okay, there we go. So early learning, this would be 745,000 in new programming. Prenatal, 1.2 million in new programming. Summer Bridge, we just did it at what you all did this year, but you can decide how you want to focus that. I have my ideas, which I will share at some point. And then our SIPS funding, that small investment, and then youth development 25. The rest of it is continuation funding, and with that particular millage rate, you're looking at 2.1 million that you all would determine how you want that.
Those are new funds.
That's new money.
funds, okay. That's available if we keep it at the same millage rate.
Keep it at the same
That's
millage
what I
rate.
wanted to get to.
And to clarify, we would be advertising an increase in our trim.
Yeah, because property values went up.
Right.
Right.
But let's be clear, we don't currently fund $6.9 million of family support services. That's
Right,
It's
we're
on the street
about to,
now.
we're about to vote,
All right,
But you're about to
that's great.
right? So that's why it's
So that's
that,
why it's there.
this is all, I don't want to say it's funny money because it's not, I mean, it's real, but we haven't voted.
Is that on the street for 1 year or for 2 years?
18 months, some of them, right?
Uh,
2 years.
Some of them are 12 or 14 months.
14.
Some are 26 months, and
See, that's all not gonna be.
family supports would be 26. Yeah, but it's gonna be in the budget.
But
For the following
the
year.
money is in next year's budget and what's being carried forward from this year is how it's gonna get paid.
No, what I'm saying is though, is that 6.9, is that number really 13.8 million? Or is it 6.9 over 2 years? If it is, then it's only
Yeah, that's
3 point whatever this year. It's not six, the whole 6.9 won't be realized this fiscal year.
No, but it does carry over into this coming fiscal year.
Yeah, what she's doing is looking at the total income of what we have left now and what we could collect based on the.
What throws you off? If you go up top and you see carry forward funding, if that was gone and you didn't worry about it and you just did the budget straight on this year's money, then you would see it, right?
Right. But we have to notice the carry forward in our budget. No,
So right now on the street, we have $6.9 million of family support services that will go out and be distributed over a 20-month 24-month period of time.
You'll make that decision on Thursday.
But September 30th, 2024, that's when that will end. Because that's based on what we have in this year's, left in this year's budget and what we have for next year's budget, right? With none of those dollars count October 1st. I want to make sure I get this date, 2024. Everything that's in that number is September 30th, 2024, backwards to today.
As long as we
Unless it
spend,
doesn't carry forward, right?
But it will
Right.
carry forward. So
Which will carry forward, the liability or the assets? The assets we know are going to carry forward. Is there liability beyond
yes,
September 30th, 2024?
Because you have a
Yes.
associated contract, is
yes.
what you're saying.
So there is, so in the 6.9, in the 6.9,
Right,
4 million of that is Family Resource Center that will carry over. So it won't even get awarded until October 1. So
in that
once
case, the funds are being
the
carried
funds
forward.
are being carried forward.
Right,
In next year's budget, the family supports carry forward is gonna go down. Because you will have expended a portion of that during the next year. But for the purposes of budgeting, it's all included in there because it's cash that's coming in.
okay, so what we're doing is Sika's giving us a view to the future. We're budgeting for just October 1, 2023 through September 30th, 2024. But we have to know that we are committing beyond September 30th, 2024 with funds in the current budget or what will be the current budget for where we are today and next year.
I just see it as dollars that are earmarked for family support centers.
Right.
That's the amount of money that we budgeted for it, so we need to make sure it's there. And then we'll spend what we spend for this year, whatever we don't spend, that remaining balance goes to the following year,
So,
correct?
but, so then you're making the determination, again, is the, what are the centers? Which one is that? Is that?
That's in
Family supports services.
Okay, the $4 million that we had budgeted for those centers. We get responses back. Again, this is staff recommendation, not Paul Mitchell's opinion.
It's not staff recommendation.
It's, pardon me, I need evaluation committee
Yeah.
recommendations that we not fund them. That $4 million, there was no magic to that $4 million. It was a number. It could come back that when the next round goes out of if, let's just say, we decide to reject both offers and we send out another ITN, RFP, whatever we're calling it, and we ask people to respond, that the number comes back and it's 3 million. It also could be 5 million. And that's why.
But it's budgeted, that's what we budgeted, the
Correct.
$4.2 million. Correct?
Or you could decide we don't want to do that. So that's why I feel like I have to show the money.
Yeah.
Because you all could decide mid-year, you know what? We weren't happy with it for whatever reason. We want to put that money somewhere else.
When is the retreat?
It's on the schedule. We
Right.
want to do it for August.
Right. And when is the final budget voted on?
And September.
Yeah, I gotta tell you, and this to me, this is where rubber meets road is on the budget, not the actual numbers that, you know, that they work out or they don't, and if they don't, you make changes. But your questions are the legitimate questions. It's like, how are we spending money? And once you've made that determination and everybody kind of has an understanding, once again, I think it would be just helpful as part of the retreat process, where we go through and we say, here's, we came up with that 4.2 million or 4 million, whatever the number is. And that's why we're building it into this budget. It also would tell the public that we really are keeping up with spending the dollars. But when an expense comes forward, a potential expense comes forward, and we don't think it's a responsible use of their resources, even though we budgeted for it, we're still gonna say no, which will make our balance look.
But I prefer she has the money in the budget. So if we do decide that we need to spend it, it's there and it's allocated.
But remember, we're not voting on a budget that extends beyond September 30th, 2024. It's great that she has it in the budget, but that money is not in 2024's budget, 23-24's budget. Sika is showing it to us so that we understand that this money could extend beyond September 30th, 2024, but the budget we're voting on ends on September 30th, 2024.
So I guess my question would be, so the
Do you
reason
understand what I'm saying?
Yeah.
Okay, if I said to you, the budget that we're voting on, that the voters have the ability to comment on publicly, ends on September 30th, 2024.
Correct.
Period, okay? If we've got proposals that are out there that we haven't actually voted on yet, but let's just say what Sika is telling us is, hey, keep in mind that while yes, it ends on 2024, that's what your budget will say. You have to put some money aside
Allocated.
for 2025. And technically, we're a governmental entity, so we run on a fiscal year budget. So this is kind of his point on the leases. When you are entering into a contract that goes beyond a fiscal year, there's an accounting difference of that. So for this year's budget, what we're voting on ultimately at the end of September, when we vote on the trim notice, is a budget that stops on September 30th, 2024. Even though there's a little cash left over,
Right.
we gotta make sure there's cash left over. That's why Sika, I applaud you for doing it. I just think it's confusing especially if you look at your budget, you end.
Yeah, and then if we had a 2-year agreement, half of 6.9 would come out of this year's budget, the other half of the 6.9 would come out of next year's budget. It all doesn't come out in the first year.
I'm seeing what you're saying. I think it needs to be shown. This is so that the layperson can look at this and say, this is this year, this is carried forward from last year, and this may carry forward to next year. And I think your questions would be answered. So.
okay, so we can do that. So we can do that.
I think I can help.
Yeah, so I want to make sure, first of all, I want to make sure that the public knows that there is no money sitting anywhere that's not accounted for in the paperwork. So that is why I put it in here, because you're voting on it in a current year budget. So when you choose a $4 million project, it's $4 million out of the current money, not 2 million out of the current money, 2 million out of the next money, and 2 million out of the next money. It's out of the current money. So when you make decisions on Thursday, that's out of this year's money.
Right.
And so I wanted to account for it, but we can show it the way.
I think what's
Yes.
confusing, is the fact that I've got program investment of 3.5 million, and I'm not about to collect 3.5 million. I've got this carry forward sitting out there.
For me, because what I'm concerned about is I want to know how much we have allocated for all these different programs. And honestly, I don't care when we spend it. I just want to know, we have decided that we're going to allocate $6.9 million for family support services. Whether we spend it or not, I know that we can go up to that number. We can go lower if we need to, but I know that money's allocated. When I look at this and I look at the different trim numbers, in my mind, I'm thinking, what else do we need to do? And how much money do we need to do it? That's what I'm thinking. Right, and I'm thinking, do we need 2.2? Do we need 3.3? Do we need 4.5? Or do we need nothing else?
But-
Like, that's
right.
what I'm trying to
But the
decide.
6.9 million isn't in just this budget year, the one we're about to vote.
That's fine, that's fine. I just know in my mind that we have allocated 6.9 to family services.
Right.
And I'm fine with that. It's like, that's the amount of money we have in the bank that we decided as a council, we're gonna spend on family support services. And whether we push it back to next year, I don't care, because I know that we have that money allocated for those services. Does that make sense?
Yeah.
That's just where I am. So that's why I don't care which budget y'all show it in. I just want to know if that's how much we have allocated for that.
Donna and I.
It may not be necessary. I was just trying to make it, for anybody who looks at it, to make it as simple as possible.
So this, okay, let's just, let's do it this way. Okay. Could we have a version that looks like what a more traditional budget looks like, and that is for October 1 of 2023 to September 30th of 2024. What amount are we spending on Dr. Glenn's 6.9 million? Okay, so that, and oh, by the way, we got a separate column that says, here's how much the total budget is for this program, of which this amount is being spent in this year that you're voting on its budget.
Literally, it's a button click.
Yeah, okay, and then I think, Dr. Glenn, you'll be able to just go straight over and say, okay, see, I've got 6.9 budgeted. 2.3 is going in this year, 2.3 is going in this year, and 2.3 is going. Yeah,
That
yeah,
works
yeah,
for
yeah.
me, right, that would be fine.
I can't get to it because I'd have,
When
when I show y'all the spending plan,
Yeah.
which you saw, the program services committee saw a draft spending plan. What you're saying to do in the spending plan, so that's why I said it's literally split.
Yeah, it's like
So
one
instead
item.
of my whole encumbered amount, we'll just put the amount that we've encumbered for next year.
So what committee is it that determines, is it the program committee or that determines these amounts?
Yeah.
You remember the exercise we went through, yeah, we had the little sticky things?
Yeah.
Does that represent our little sticky things? I don't think it does at all.
Well, what I'll say is, we've tried repeatedly on early childhood and early learning. And given the money that was going into early childhood and into early learning from the ARPA funds, I think this past session is about $515 million. There was a bit of heartache on overlapping funding. And so the Program Services Committee kind of decided that let's at least get into next year and let that ARPA funding spend down, and then we can know exactly what you all need to be funding as a council. So that's why you're seeing it.
Yeah, because
That way.
there was no doubt that the number of dots on early learning, it was overwhelming. I mean, it wasn't even close,
Yeah.
you know, and that was, remember, this was my point about the gun violence, which, by the way, I think is very important. I'm anti, just in case somebody wants to know which side of the issue I'm on, I'm anti-gun violence, but it wasn't on our dots, right? But I do remember somebody coming back and talking about the fact that there were other funds for what was our priority at the time. I think this is to your point, Sika, and I don't know that I know this. I know that there's I don't know how that determination was made, that those needs were being met, because that's essentially what we're saying. That's why we've moved on to other priorities that were in those top 6, 7. And we moved away from early learning. I still, as a member of the community who, I don't know what he does every day, but you know, with the early learning coalition here, I hear a lot, and it's like there's still a need out there.
Yeah.
Now we help meet a certain need with the ELC, but
But in all fairness,
Well,
I'm
if
sorry.
I may, so when you're looking at early childhood, you'll see that there's 1.2 in prenatal and postnatal. So that's dealing with preconception up to 3-ish, in some cases 8. So we've got 1.2 in there. And then we have a proposal that's actually coming to you all on Thursday that is dealing with resiliency, that dovetails onto the resiliency program that the state is funding in the public schools. So this is a resiliency rebound behavioral health that would look at that pre-K 3, pre-K 4 piece in the public schools.
So as part of our retreat, maybe, and I don't know if it's Michelle, if it's you, Sika, but maybe sort of an overview, again, a conversation where here are where the federal funds, the state has drawn down, here are funds that the state is giving to your top priority council members. And that's why we haven't done that. So that we, again, have a look ahead for the next couple of years of what we should anticipate, because with funding, I get the fact that when we fund a program, it's much like the summer program, summer and done. You want to apply again? Great. And then some of these, they're 2-year gigs,
Not
but
the summer.
I know,
Okay.
but the ones that are
Yes.
coming forward could be, it sounds like 26 months. I knew about the 14-month one. So if somebody is voting on a budget, they want to know sort of like what can we expect to fund in the future?
Mhm.
And it may turn out that these resource centers, which was an idea that, how can we collectively bring everything together, may turn out it's not a good use of $4 million, and we'd rather that money go into, at that point, early learning initiatives,
Well, and we came up with if I may, I'm just talking, I'm not asking. So we came up with the resource centers. It came out of the needs assessment, and we looked at the price that would go along with that. So we didn't just pull numbers out. We tried to do some extrapolation on that for sure. But again, as a council, you all can decide, given whatever research information. I will say, I know with so for example, the Early Learning Coalition right now has $4 million. They're trying to get out of the door. By June 30th.
yes,
By June 30th.
because they're on.
And it's up to like $1,200 in recruitment and retention and all of these things. And so I don't think we would want to fund that, to your point.
Remember, this was the argument I had.
That was the exact argument.
I did not want to fund teacher deals. Not that I don't think teachers deserve more money, but there were groups. But I was talking about programs, actual programs that people were working with 0 to 3-year-olds, helping them get ready for pre-K 4 and kindergarten. That, when I put my dots, and by the way, my entire dot thing went there, and a couple on homelessness. So I mean, I'm rabid on this issue. But it wasn't so much on. It was programs, and if the programs needed additional resources for teachers, that's a different argument altogether.
I think,
and that's where
Let me just-
DLC funds are doing.
I think part of the problem is that the rest of the council is not fully in tune with what's happening within the program services and committee. I really think so. And the reason why we are where we are is because of decisions that were made at that committee about what are ARPA dollars, or how are we going to prioritize the priority list? Do we try to do them all at one time? Do we, do different, stagger how we do it? And that's a big problem, because when we have our meetings, our program services report is like 10 minutes, from the full meeting, and it's hard, I think, for the council members that aren't a part of that committee to understand how we got here. So, when we have our what do you call it? When we all come together, our retreat, thank you. When we have our retreat, I do think it's a good idea to say, this is where we ended at our last one. Here's how we got to where we are. This is where we're going. And then I do think we need to find a way to bring more of that committee meeting into the full council meeting so that everybody's on the same page, because I know how we got here. And I understand why Rocky's like, how did we get here? Because he wasn't a part of those conversations, and we don't discuss it enough during our full meeting. So I think we need to find a
I
way to
think
resolve that.
I had that same feeling when I thought identified 5, maybe 6 areas, and all of a sudden now it's 7, 8, all these other things got included. And I'm like, Tom, I don't remember that discussion at all. When did y'all
And it
add
happened in
these?
the program services committee. That's why I'm thinking we gotta pull that meeting into a larger group, because and it makes sense to the committee, we move forward. But I don't think people who aren't a part of conversations, then we get to this point and you're like, how did we get here? And I understand why you're there, but we gotta find a way.
42% of the money is going to something that was.
Yeah, and in all fairness, they did try to bring early learning to a part of this, and we had issues with what different council members wanted to see. And so they took it back and said, okay, we'll take this off. Let's work this, let's figure this out. But we wanted to move forward, because then we were getting pushback. Y'all aren't getting dollars on the street. So let's get some dollars out of the street while we figure out what we're gonna do with the early learning. And so that's how we ended up, in situations.
So I went to the last program service. I've gone to 2 in the program services committee. One, because I was invited to explain what my rationale was behind a position. The second, I came here when Mimi Graham was speaking, because I think the woman is brilliant, and I think she has an awful lot to offer, especially programmatically. And I'm like, I see her on the agenda. I'm like, Mimi Graham's gonna be there. Oh my God, I'm definitely. And there was, you guys, the panel was really impressive. It was all about early learning. Now, it initially it was going to be limited to like 5 minutes each, and I'm like, that old country song of, for this I shave my legs. I should. So she can speak for 5 minutes, but to Daryl's credit, he allowed them to go on. That conversation, that kind of conversation, is so valuable, especially to a lay person like me. I won't say novice, but a lay person. I don't know what you see in the classroom every day. I don't time to see the results. And I know the importance of it. And so maybe that's something, those kinds of opportunities.
Bring them to the council.
Yeah.
I agree. Because I'm seeing the gap, the holes here, and I'm thinking, we did discuss this, but everybody wasn't a part of that. And then we asked to have decisions or these types of conversations, but y'all understand how we got there. So we need to find a way. And I think we're thinking of some ways to have more of a council conversation around this. So it's not just a smaller group, a committee making some of these decisions. Because I remember the dots, and I remember when early learning got pulled off because we couldn't make decisions, or, well, let's prioritize this group, but everybody wasn't there. So I think we can work to find a way to fix that.
A little of this also, in fairness to that committee, is when I think of the other 2 committees that exist, the executive committee, they all have to vote on that thing, and it's very specific, and it's shorter. It's like, hey, you're funding this, it's not a program that we're going to put an ITN out and there's an evaluation. So it's easier.
Yeah.
Same thing with the budget. It's black and white.
Yeah, that's part of,
It's just harder to articulate in a short period of time. And I don't know the fix, but other than I've actually tuned into a couple, not while they were going on, but when I couldn't sleep, and I watched a few. No, they didn't. They got me more riled up. I was like, I'll never watch this late at night again. So I had tuned into a couple just just to figure out what's going on.
Yeah.
But the core of what we as a council do is really that program services committee. And when it originally started, if you remember, it was to select the Q plus Q. That's how it started. Yeah, and then it kind of turned into,
But it's the heart and soul of what the council does. It really is. And when that dawned on me, that's like, but only a small group are kind of making those decisions. And then we have these conversations and people don't know all the gaps. So I hear you and I agree. I completely agree. And I think we need to find a way to fix that. So if we could talk to
I was,
Mr. Jones and figure out, you have a plan.
I don't know if it's a plan.
Okay.
So we've talked with other councils to
Okay.
see how they've kind of managed it. And I will say, I think we're about at a point where maybe we could look at a every other month workshop model. So that we are having full council meeting in 1 month and the next council meeting is more of a workshop where you're talking about these things. It's like a program services workshop that maybe instead of Chair Glenn chairing, we have
Jones.
Yeah. Yes.
So
So he
the
would-
council.
So we'd open it up,
Yeah.
but then we and let Dr. Jones
Do the
moderate.
right. But
So he would
it's-
moderate and facilitate the
With the full
conversation.
council.
Yeah. with
See,
the
I
full
like
council.
that. I mean, as long as we can do every other council meetings to discuss things like this.
because by
But
the
then-
way, if you think about it, look at the budget.
Yeah.
The decisions are kind of made and again, we're at a point of maturity of an organization that we've never go there, but I would say that we are at a point where the day-to-day operations is an auto drive.
Yeah. I like that. And maybe if we can bring that up at the next council meeting for discussion, but I see where the gaps are. And I think by bringing the full council into those conversations makes more of a collaborative decision and everybody knows why we end up and how we got to certain places.
And
And
it
so,
can be a discussion
Yeah.
on the retreat agenda. So
Yeah.
we're hopefully looking at either the third week, the week of 21st, or the last week in August. No, it's the second week in August or the last week in August.
the second or last week in August, okay, for retreat.
And we'll talk about that on Thursday. School starts
Second week of August.
second week of August, so the third week might be a better week, but to talk about just this, because I do.
Or the first week. I don't want to hold stuff up. So
Okay, I mean, in my opinion, I agree with you, Treasurer Mitchell, that we are, I'm feeling more settled
Yeah.
in what we're doing and how we're doing it and the money. And so now we got to get into a place where the council, to former council member McFadden's point, can have some discussions and really really hone in on the focal point. And while the strategic planning that you all did was good, I think now we're at a point where we can come back and really focus on those 3, maybe 4 areas and focus our attention and our funding in those areas. And then we can wrap the rest of that stuff in there, which was.
Yeah, because
That's what I'm thinking.
when this is all said and done and we vote on this, then the real job is a fair evaluation of what programs we funded, what those results are. Because obviously we don't want to fund the ones that, well, they feel good, don't do anything,
That's why I want that policy, those individuals that are managing these programs, is I want to know, what are we funding and what results that we get from them? And the ones that are working, let's keep doing more of those. And the ones that aren't working, we don't need to fund those anymore. So I think it's really important that the staff is monitoring and can report back to us on the things that are important to us. But I completely agree with you.
Dr. Gunn, we have I think it was Mr. Watts whose committee did the ERP, I'm gonna call it an ERP,
Right.
whatever it was, but that's a dashboard. I mean, right now, the dashboard is empty because the vehicle hasn't been turned on, but as people are required to put entries in, we're gonna see it. You're gonna see it instantly. How's my car doing? What's put your thumbs, your fingers, how's my heart doing, right? Yeah.
Okay. Mrs. Ford.
Yep.
So, I want to make sure that I understand my next step. So what we'll do is we will annualize this rather than. So we're gonna take this and instead of showing this rollover, we're gonna annualize it and
Every
show
year.
how much of the funding for that year rolls over. And then the corresponding programming that has been encumbered for that year.
Right.
Okay, so we'll just add a tab
By fiscal year.
by.
Yeah, because the little
We'll add
thing
a
you did
tab.
for me on the millage, yeah,
We can do that.
okay.
Thank you.
We built out the hard part. That part isn't.
All right, so we've done the budget, we.
We are on number 9.
That next meeting day.
Next, so the next meeting agenda is the budget and the trim. Period.
That's what
Budget
you like
and the
there.
trim. Oh, and is it, no, and the.
Oh, FL plan,
And the FL.
a
costs.
recommendation on whether to
Right.
move forward. Because that will require a resolution.
That goes, right, okay.
And if it pleases the treasurer, we can have the general counsel go ahead and draft us a resolution for that next budget meeting.
Yeah, that you guys can, right, and, right, Commissioner Cummings will be there. That's fine, okay.
And we are definitively moving to the 10th of July.
The 10th of July, yes, the 10th of July at 5.
Jacinta, you've already done that, right, on our calendar? Then I know I've accepted. Because if you send me something, I just accept.
Good job.
About a year and a half to be caught. Okay, so we have 3 things on the next agenda. One, consideration of a resolution dealing with the investment of our funds. 2 is a deep dive into trim and the budget committee making a recommendation, being prepared to make a recommendation to the full board. And 3, the budget, and likewise the beginning of that budget. And you're going to make the adjustments to make it easier to read for all 3 and Commissioner Cummings.
Hard work is done, yeah. So we can do that, that's not a problem. If we can get it done in the next day or so, we may go ahead and send it out.
Okay.
Okay.
And Jacinta, you sent out the invitation to everybody. Any committee member comments that we haven't already covered on? Okay, well, without objection, can I get a motion and
Yes.
Thank you.
Thank you. Thank you.
Without objection, we are adjourned at 7:02.
Thank you so much. Thank you.
I need to stop the framing, okay. And. No, I don't.
You
I
can
don't hear.
end it.
You can just end it.